So again, when I break it down to kind of first principles and do a comparative advantage, the U.S. just has despite all its problems, still has a number of advantages. And because of all those advantages and because of all the challenges that the other countries have, I think once we get through this period of, hey, you're being a really mean guy and I don't like the way you're saying that to me, I think once, when people really have to make a decision, when countries really have to make a decision, I don't think they will choose China over the United States for a whole number of reasons.
Welcome to Thoughtful Money. I'm its founder and your host, Adam Taggart. Of all the disruptive policies President Trump has made so far in his second term, his hardball strategy to reform global trade has received the most scorn. His detractors call it nonsensical and ham-fisted, that it's based on faulty logic, poor math, and has done grave injury to relations with our closest allies. They fear it's actually driving the rest of the world into China's, our chief competitor's, arms, and as a result, substantially damaging America's future prospects. Is this true? And is this the reason why bond yields are rising, the dollar is weakening, and gold is soaring? And most importantly, will China end up drinking America's milkshake? For answers, we're fortunate to welcome back to the program Brent Johnson, CEO and portfolio manager at Santiago Capital and publisher of the Macro Alchemist. Brent, it's great to see you again. Thanks so much for joining us today.
Yeah, sure. Thanks for the invite.
Hey, you're very welcome. Well, look, for the question of is China going to drink America's milkshake, couldn't think of anybody better to talk about this with than the developer of the dollar milkshake theory.
Sure.
There's a lot going on, a lot to talk about. If you don't mind, Brent, let me just start by reading something that you just recently wrote at the Macro Alchemist in your post, The Donald and the Damage Done. Where basically you said that anyone who's been surprised by the Liberation Day tariff drama, well, then they haven't been paying attention, close enough attention. Let me read this quick session here. All right, you said, quote, America is telling the world exactly what's coming. This is not the chaos of decline. This is not the flailing of a fading empire. This is the world's dominant power consolidating its control unapologetically, aggressively, and with the full weight of its economic engine behind it. And the playbook is not subtle. The Trump administration has thrown out the ivory tower frameworks of globalization, free trade, and rules-based cooperation and replaced them with something far older, simpler, and more ruthless. Realpolitik and statecraft backed by financial warfare. Tariffs are not policy details, they are pressure points. Supply chains are not economic abstractions, they are leverage. And foreign governments and multinational CEOs are not partners, they are counterparties in a zero-sum contest for control. Access to the American market, the largest, wealthiest, and most consumption-driven in human history, is no longer free. It will come with a price. But power moves like this do not come without consequences. Global capital is shifting, markets are trembling. Foreign holders of U.S. assets, lulled for decades by predictability and privilege, are discovering that what the U.S. giveth, the U.S. can take it away. This is not about trade policy and it's not about tariffs. It's about power. Who has it, who does not, and what happens when the world's largest economy decides to stop pretending otherwise. All right, so very clearly to you.
Very subtle, right?
Very subtle, but yeah, but in your eyes, it's actually very clear what's going on. It's not a chaos of people just making stuff up on the fly who don't know what they're doing. You're saying, no, this is a very clear strategy, and it's actually not even that complex. It's quite simple. It's all about power at the end of the day, and this may be one of the biggest power flexes the world has seen in recent decades. So I want to dig into all this with you, but if we can, let me just start with this. Do you think, just asking you, for your best assessment of probabilities, do you think that this plan is likely to work?
Well, it depends on who for, I guess, is the question I would immediately ask
for
back.
Americans. Let's start for Americans.
Well, then we have to figure out which set of Americans, right? And so I would say overall, yes, but it will not be easy. And it will not be smooth, and there will be great pain involved in it working. I think the best way for me to describe what's happening is not just what I stand by everything that you just said and that I wrote, but at the end of the day, in really simplified terms, the United States is changing the way it does business with the world and changing the way it has interacted with the world for the last half a century or more. And even under the best circumstances, that would be a very volatile transition. And I think it's easy to look at the world and say, we don't have the best circumstances under which to try to do this. And I don't think it will work perfectly, but I do think it will work better than many seem to think it will. I'm open to being wrong, and nothing in this world is certain. But I think when we get down the road another 9 months, a year, and we get more clarity on how this is actually going to work and what policies are ultimately going to be put in place, I'm not as apocalyptic as many people are.
Okay. Well, then let me ask you this, Brent. By when do you think we will start to see that this is working, if it's going to work? And what will you be looking at to be able to judge that it is indeed working?
Yeah. So it's a very good question, and I think we got to be careful how we say whether or not it's working. To be clear, I think this is going to be a very volatile year. It's already been volatile. I think when we spoke in the summer or last fall, I mentioned that my plan for 2025 is that I thought it would be very similar to 2022. And if you remember 2022, it was a complete regime change from an interest rate perspective. The world hadn't seen anything like that in a very long time. And I thought with Trump coming in, it was a regime change, and we were going to see things that the world had not seen in a very long time. And so I think the next, well, we're 3 or 4 months into it. I think for the next 4, 5, 6 months, we're going to continue to have volatility, and we'll probably see lower prices in markets and asset prices. I guess I think by the end of by Q4, maybe by early next year, we will start to potentially see some benefits of what I think is going to happen. And when I say benefits, it doesn't necessarily mean that the stock prices are back at their all-time highs and there's no more volatility. But what I mean is that I do think companies around the world will move production here. I do think manufacturing, to some extent, will come back. I do think wage pressures will rise because better paying jobs will come back. I don't think it's going to be perfect, and I don't think it's necessarily going to work as well as Trump thinks it will work, but I don't think it's not going to work at all. I think it will work. And I do think the US has the most important market in the world. And I think weaponizing, for lack of a better way of saying it, the US consumer market will work better than many think it will.
Okay. And, I see you take care to say, hey, look, I don't necessarily mean that we're going to see the stock market rush off to new all-time highs. Listening to the administration, I am not sure that is their primary goal here. I'm
Totally
sure
agree
they
with
like
you.
it, and I think they hope it will be a secondary result. But if we take them at face value, there's always some danger in doing that. But if we take them at face value, and they're saying, look, Wall Street's had its time. It's now time for Main Street. My sense is their scorecard is much more about national security, but also, we want to restore manufacturing, both for national security reasons, but also, we want to try to rebuild the middle class in this society. And so they're going to be measuring it more in terms of jobs, in terms of growth of industry, things like that, not necessarily by the S&P price.
I completely agree with you. And I think we have to throw in there what the US is able to accomplish geopolitically over the next year as well, because all of this, in my opinion, there's 2 primary goals. Number one, make America great again. Whether you agree with that, what that means, it doesn't matter. That's what he wants to achieve. When I say he, I mean Trump. And the secondary thing is the containment of China. I think everything is ultimately about making America great and containing China. When we talk about Mexico and Canada, we're really talking about China. When we talk about Europe, we're really talking about China. Again, I wouldn't necessarily choose for it to be this way, but this is what's happening, and I don't think this is going to stop. And I actually don't think if Trump were somehow removed and he was no longer the president, I think this would still be the game, because I think the genie's out of the bottle, and I think that's where the dice have been thrown, and this is what's happening.
Mm-hmm. Mm-hmm. So, what's interesting about this is, you said, look, if you're surprised by this, then you weren't paying attention, because unlike many past, politicians, Trump has been incredibly consistent and transparent, and quite vocal that he was going to do pretty much exactly what he's done here. I would say, and look, folks, I should have opened with this, that this is not a partisan political discussion. We're just talking about it because it's the political regime that we currently have right now. And as
This is
Brent
the
said,
reality of the situation.
yeah, the die has been cast, and we're all
Yeah.
our lot is tied to all this, right?
Yeah.
The one thing that I'm not, I think Trump could have done a better job at. I guess you could say there's a lot of criticism that's been launched at him saying, look, he surprised Wall Street and everybody with these reciprocal tariffs, which turned out not to be reciprocal tariffs, but turned out to be tariffs plus a whole bunch of other stuff that caught a lot of people by surprise. And I can argue both sides of that coin, because I think to a certain extent, I mean, part of it is, the negotiator is not going to reveal all his cards before he plays them, and I think he did kind of want to catch not necessarily Wall Street by surprise, but wanted to catch the attention of all the trade players he's trying to wrangle together. But we could argue there was a communication error there. The one that I would probably argue is that this whole trade kerfuffle that's going on right now, I do believe that the intent there is to get better trade deals, on average with everybody for America going forward, and hopefully, repairing as much hurt feelings as we can along the way. But I think the number one thing there is to ring fence China, which you said earlier, right? And I'm not sure that Trump was as vocal as I perhaps think he should have been, either on the campaign trail or once he got elected, saying, "Hey, everybody, I'm going to prioritize ring fencing China over a lot of other things right now. And this is a national priority. We as a country should rally around this. Let me make the case for you why China's bad right now, and we all got to sacrifice a bit to really bring China to heel." So I feel like the American public has just gotten tied to this, we're going to try to shove China in a box strategy. And I think a lot of people just weren't brought along well enough in that to really understand the why behind it all. And that's one of the reasons why people are just sort of wondering, why the hell are we doing all this right now, right? Do you have an opinion on that?
Yeah, I don't think you're wrong on that, and I wouldn't argue against that too strongly. But what I would say is that I don't think what he is doing is totally out of line with what he was saying earlier. I think he's actually been pretty clever, and I know nobody ever wants to ascribe anything positive to him, but I think he has been relatively clever with the way he has dealt with China, even in his first term and now. And that he's always said, "I don't blame Z. I don't blame China. They work really hard. They've done a great job. They've raised themselves out of poverty." And he never really speaks badly about China, other than that they beat the hell out of the U.S., right?
Right, right.
And then he always blames it on the U.S. leadership and U.S. business leaders, and et cetera, et cetera.
Right. I mean, he says they lie and they cheat and they steal, but he says, but I get it. They can get away with it. My predecessors let them. Yeah.
Yeah. And that's probably the right way to go about it, right? If he were to come out on the campaign trail and just rail against China, maybe he doesn't win the presidency, right? And so maybe he does, but maybe he doesn't. And I think, and I should step back too. I want to be clear, like, and this will lead into what I think we will also talk about. But I think it's important to remember that Trump envisions himself as two things: the greatest president ever and the greatest deal maker ever. So that means two things. Number one, if you're going to be on Mount Rushmore and be considered the greatest president ever, you cannot be the president when China ascends to become the global superpower. right? You have to contain your political rival if you are going to continue to be, or if you have any hope of being viewed as the greatest American president. That's number one. But he's also thinks of himself as somebody who is great for business and great for markets and a great deal maker. So what he doesn't want is China to collapse, because if China collapses, the whole world goes into chaos. And so he doesn't want a global depression. I think he's willing to accept a recession, but he doesn't want a global financial crisis and a global collapse, because that's not good for anybody. What he wants is to be president of the world. I mean, that's what his ego wants, right? And I think he wants the U.S. to be the shining city on the hill in that global world of his. And I think he wants everybody to be doing a lot of trade with the United States under those circumstances. Now, the reality is you can't get all those things, but that's what he wants. And so that's what he's going to try to get. But I don't think that he wants to rule over a world of smoldering ashes. I know some people believe that he would, but I don't think that's the case, because that brings in just too many negative things, and it's hard to put a positive spin on a global financial crisis, right?
Mm-hmm.
But if you can say, if you can go through a couple hard months or a couple hard years, have a recession, and then by the end of your term be coming on the way out of it and having delivered on some of the things you promised you would, that I think he would love.
Yeah, and just to go back to my criticism, that's where I think maybe he has fallen a little short here on the communication side of things, which is to get the public behind, hey, this may require some belt tightening where we may have to go through a recession in a couple of lean years, but it's all going to be so much better on the other side. And he's done, I think, some of that on the sort of like, look, the economy I inherited was so bad, I'm going to have to do some repair work, and that's why I've got my whole big checklist here of everything from trade to tax cuts to deregulation to DOGE and all that stuff. But the China part, I'm just not sure he pre-sold that to the American people. Again, it's sort of moot at this point.
No, I agree. Well, I agree with that. I agree with that.
Yeah. So I guess first and foremost, let's talk about China, and then we'll expand the beam here. Okay. So first and foremost, do you agree that this is the right thing to be doing with China? I mean, sort of as best I understand the general situation, it seems like there's a lot of there. Certainly heard a lot of other countries as well make the same complaint. Actually, sorry, real quick, before we get specifically to China, something I've said on my program a lot, I'd love to get your thoughts too. So a lot of people have said, hey, why did this all have to be so fast and so chaotic and so heavy-handed, right? Why couldn't Trump have gone and made nice to all of our allies and initiated a charm offensive and then gotten a coalition of the willing and then tried to do all this, right? And I don't know the answer to that. I'm obviously not privy to the president and his cabinet's interior thinking. But my sense is they felt they couldn't. Either they didn't have enough time, or they didn't think that strategy would play out, had enough probability of playing out the way they don't want it or whatnot. So I feel like what Trump did is he just called everybody at the poker table. He basically said, look, we all got to put our call. I'm calling everybody put your cards down. And he's just betting that he's got the best hand. And to your point from what I read here, he thinks sort of his trump card, pardon the pun, but his trump card is, I control access to the world's biggest consuming economy that everybody wants to play in and everybody kind of needs to play in. And so, he calls the table, says, look, if you get a better hand than me, great, fine. I'll have to bend the knee to you. But if not, you got to bend the knee to me if you still want to sell into my market here. And it ruffled a lot of feathers, right? Everybody, to a certain extent, was benefiting from that status quo, maybe benefiting at America's expense to different degrees. And Trump is now basically saying, look, I want you to fall in line. I put out my big poster board, which was the big stick I was threatening to hit you with. Now you call me on the phone, we're going to negotiate something that's going to be way better than that poster board I had, and probably have some nice big carrots in there for you. But part of that deal making, I'm sure, is whatever deal we strike, you got to agree that you're on Team America when it comes to China. And so basically, he was using this calling of everybody at the poker table as an accelerator to get as many people as possible, as quickly as possible, or as many countries as possible, as quickly as possible on America's side so that he could then apply maximum pressure to China. Do you see it similarly?
Yeah, I think that's a perfect analogy. I think that's exactly what he did. Because if you were to try to achieve what he is trying to achieve under quote unquote normal methods, right? I I don't think you would even get more than two steps before you start getting stymied by committees and conference calls and, trade meetings and, summits and all this kind of stuff. I think at best, it would be September, October, November before you had a legitimate sit down, right? Because each
Hmm.
side would want to, take a few months to do some internal studies and figure out our most important points and da da da. Da. And, and that's how government has typically worked. And that's why things drag on so long. And that's partly why the US is in the situation that it's in. And I think that he believes, and I think the people around him believes that if you're going to do the changes that he wants to do, there's really only one way to do them. And I tend to agree with that. I don't like it really, but I don't. If you were going to try to change the way the United States does business, and you were going to try to change the inequality in the United States between the top 1% and the lower 99, and you were going to try to bring better jobs back, and you were going to try to make it so that, a family of four didn't have to work three jobs and, live on minimum wage. I don't really know how else you would go about it than what he's doing. Now, I'm sure there's some people out there who have some ideas, but I think largely those ideas have been proposed before, and then they just get abandoned because they're really, really hard to do. And anytime you make a transition like this, there is going to be political pain. And the reality is most politicians can't stand even a little bit of pain. That this is one area where I think Trump's a little different than most politicians. I think he largely has the ability to withstand pain because he just really doesn't care what anybody else thinks, right? And
Yeah,
and
and theoretically, even though today he just put out a cap for Trump 2028, but theoretically
yeah,
he's not running for reelection, right? So,
right, right. Well, and the thing is I think this is his greatest strength, but oftentimes your greatest strength is also your greatest weakness, right? And the fact that he doesn't listen to anybody and he thinks he knows everything and it's his way or the highway, that can be a real detriment. And I think we're seeing some of that. But it's also a big skill to have. I mean, if you operate in the public eye, you are always going to get criticized. Every president in history has been criticized. Every president in history, the other side has wanted to impeach him for some unforgivable expense or episode. And so I think he's just trying to just bull in a China chop, run through it and get it changed. I don't remember if we've talked about this before, but the similar analogy I've met is or used is Malay in Argentina. I mean, that guy has just taken a chainsaw to everything and just gone 100 miles an hour. And I think that's why he has largely been successful so far. Now, he's still got problems too, and there's no guarantee it's going to work in the end. But I think the reason he has been successful so far is he has moved too fast for anybody to catch him. And to me, Trump has already played his hand. And to me, the faster he moves, the better he's going to be. If he slows down, I mean, he can slow down a little bit. And again, I think he had to slow down because you don't want a crisis. But I think if he tries to go back and play Mr. Nice Guy, it's politically over for him.
yeah, yeah. To a certain extent, he's kind of taken the Cortez strategy where he has burned his
Yeah,
ships, right?
yeah,
He's fully committed. um, and interesting, this is not just a geopolitical strategy. It's the same strategy that his administration has taken domestically, right? With Doge and everything. And I've heard, Scott Bessent say, yes, we intentionally have been moving as fast as we can here because we know, and we know we're going to break some things in the process, and we'll just have to repair them as we go. So, because if we went too slow, it would give the chance for the inertia of the establishment to then admire us, right? The lawyers would get involved, the
yeah.
lobbyists would get involved. We would just be basically fighting bureaucracy every step along the way. So
Exactly.
maybe they did look at Malay and say, look, that we gotta borrow that same playbook. So anyways, at least he's consistent. So the reason why I wanted to drill into that is just to put words in your mouth, correct them if they're wrong, is you may like it, you may hate it, but you shouldn't really criticize it that there is method to the madness. It's not just chaotic, loose cannon, out of control, uh, you know, getting reinvented every day type of an approach. It actually is a very intentional approach. Now you don't have to love it, but it's not being made up on the fly, is what you would say.
No, I mean, I I don't think it's 3D chess at all. I think this is the guy walking onto the playground with the biggest hammer and just saying, guys, this is the way it is. You know, it's not sophisticated. It's just
It's
power.
power.
It's like it's power. It's pure and simple. And here's the interesting thing about this. And I know you've talked with Michael Every before, and he's he's somebody I've become pretty close with, and we see many things very similarly. And whenever I talk about this stuff, and I'm going to say this because in case somebody new is listening, I know some people have heard me say this before, but whenever I come at this, I'm coming at this from a asset allocation money making perspective. It's not my job to pass moral judgment on what's happening. It's
Yeah.
my job to remove my emotions from it, just look at what's going to happen, figure out what's going to happen, and then try to make money off of it. And I think many people in my profession over the last 50 years have had the luxury of, when they invest in developed markets, let's call it, of just looking at the numbers, just looking at it from an economics and finance perspective. And I think those who focused on emerging markets or non-developed markets or, frontier markets, they have always had to put a certain level of political risk, geopolitical analysis on top of it. It was never just a numbers game. And I think many people who have focused on it just being a numbers game, and does the cash flow net present value come out to be positive, I think they're having to rethink the way they do business and the way they decide what to invest in. Because I think the last 50 years has been fairly unique. I wouldn't say unique in history, but it's been fairly unique over the last couple hundred years and much of history, because for much of history, it wasn't peaceful, and it was very much based on power, and it was very much based on the local king or queen or governor saying, this is the way it is, just go do it. And I think many of us grew up in kind of this golden age of peace and tranquility. Now, I know there's people that are listening in and they grew up in some place that wasn't peaceful and tranquil, but in general, those of us in the West have benefited from that. And I think in many ways, those days are gone. And
Yeah.
I don't like saying that, but I kind of feel like they are.
Well, you aren't the only one saying this, as you mentioned. Michael Every has been saying this for a long time. In fact, he was predicting it for a long time, ringing the bell, saying that globalization is the anomaly and mercantilism is much more the norm. And it certainly seems the pendulum has swung very quickly towards mercantilism, way faster than most people thought. He also says his new little catchphrase, or one of his new little catchphrases, is DM equals EM, right? Which is that developed markets are going to start looking and operating a lot more
Yeah.
like emerging markets, which is exactly what you just said.
And, Russell Napier made this call 4 or 5 years ago. He said, if I was the head of a major bank, I would fire the developed market heads and I would promote the emerging market guys to the developed market desks. And I mean, every day that becomes more and more prescient.
Well, I wonder if any bank ever did that. And I'm sure they're going to be much better positioned as a result of that. All right. Well, so now I wanted to get to China. So China, big player, does seem to be quite guilty of a lot of unfair trade policies and practices, not just the U.S. and many other players. If you have anything you want to say about that one way or the other, please do. But where I'm going with this is, you've said, look, Trump wants to bring China to heel, but he doesn't want it to fall into crisis, right? That doesn't serve the interests of the global economy. And a lot of people here, and this is going to the heart of my question to you, of will China end up drinking America's milkshake, right? So there is a cadre of people who say, look, China's the rising power, America is the fading power. Trump has picked a battle here that he can't win. He's pissing off all of everybody else on the global geopolitical chessboard and driving them into China's arms. I don't necessarily think you think that's the case, but if you could sort of address your
Yeah.
answer to that. And then so also talk about, as you talk about in your piece, China's got a lot of things to deal with right now. Like Trump may be picking a good time to push back on China here because China's already kind of on its heels, being stuck in a balance sheet recession, having this incredibly moribund real estate industry, which is where the majority of their citizens hold their wealth. It's got a big demographic problem. The population there is actually shrinking now, which is hard for people to wrap their brains around, but it's actually the population of China is now going down after rising so much over the past 50 plus years. So any and all that I just mentioned there around China,
Yeah.
what are its prospects here?
Well, I mean, I don't think they're great. And I know people are, it's funny because I've been doing this for so long now. I anticipate the points that people are going to give back to me as I make my comments. And so I'm going to answer the China question, but I'm going to set this up as saying my whole framework, the whole dollar milkshake thesis was born out of the fact that the United States has incredible problems, incredible challenges. They've made numerous mistakes. And this is going to be the consequences of all those mistakes. And the debt is perhaps the one that people like to focus on the most. And if the US had kind of maneuvered itself into this position while the rest of the world, or even one other part of the world, had done any better, I would probably agree with those who are, I call them the American fatalists, who think that there's just no way the U.S. Can remain on top. But that's not the case. The fact is the rest of the world has made all the same mistakes, or many of the same mistakes, and they are not fighting back from a position of strength. They are, in fact, themselves in a weakened position. And when I say that, I mean Europe, I mean China, I mean South America. You go around the world, they all have similar problems. And so when we look at, and the other point I would make is that all the sins of the United States do not bestow sainthood on its competitors.
Mm-hmm.
And I think it's very easy to look at our leadership and all the mistakes we've made and say, God, these guys are a bunch of clowns, and then automatically think that the rest of the world is run by geniuses. But that's just not the case, and it is a relative game. And so when we come back to, so now I'll bring it back to China. The fact is, if the United States is driving the rest of the world away, I do not think that they are running into the arms of China. And I think that will be borne out over the next year or the next couple of years, however long this whole thing plays out. Now, if I am wrong and you see that Europe and South America and everybody else aligns both politically, strategically, and economically with China, and the United States is all on its own, then I will raise up my hand and say, you know what? I was wrong. You were right. But even if that were to happen, and I think that's a pretty low probability, but even if that were to happen, I think the US could still compete pretty well against that. And I say that because the US, despite all its problems, it just has so many incredible natural advantages. And whatever so let's just war game it out. Let's say that does happen. Let's say 5 years from now, the rest of the world is aligned cohesively and it's US all by itself. I don't think the transition period to go from here to there is going to be a smooth one. And because of all those other countries and all those other pieces also have the same challenges that we have, I think in that interim, the United States can outperform them. And if every country had to be self-sufficient, and I don't think we're going back to a world where there is no trade and every country just produces everything it needs internally, but if that had to happen, I think the U.S. has everything that it has everything that it would absolutely need. It might not have everything that it wants, but it would have everything that it needs. And I don't think that can be said for the rest of the world. So again, when I break it down to kind of first principles and do a comparative advantage, the U.S. just has despite all its problems, still has a number of advantages. And because of all those advantages, and because of all the challenges that the other countries have, I think once we get through this period of, hey, you're being a really mean guy, and I don't like the way you're saying that to me, I think once, when people really have to make a decision, when countries really have to make a decision, I don't think they will choose China over the United States for a whole number of reasons, and we can kind of get into that. But I think that's the case, and that means then what? So let's say that I'm right for a second. Let's just assume that I'm right. And so now China has all this production, they have all this manufacturing capability. Who are they going to sell to? Well, they would have to sell it internally. And there's this theory called Say's law. Well, production equals demand. However much you can produce, then that equals demand, because it just offsets what's produced to the people that produce it. They're making money from it, so then they need to buy stuff. And so, but the reality is China cannot sell all of their inventory internally or even locally in their region at the same prices that they could sell them to the United States. So yeah, if they had to dump all their inventory, all their production domestically or within the Asian region, they're going to have to do it at lower prices, and therefore the revenue is going to fall. The problem is China has borrowed a lot more money than the United States has. If you look at the rate of growth of China over the last 25 years, it's higher than the United States. And their economy is levered 2 or 3 times more than the United States economy is levered. So what that means is if their revenue falls, the revenue cannot cover all that debt that's been taken out. And then some people will say, yeah, but they've loaned it all internally. They can just write it off. Okay, that's fine. So then what's the outlet valve? Well, the outlet valve is the currency. If you write off all these bad loans internally and you print to cover them, then your currency falls in value. And the reason that would hurt China more than it hurts the United States is there is zero external demand outside of China for yuan. Nobody outside of China needs the yuan. But as of it stands right now today, everybody outside the United States needs dollars. Now, that may change someday. And I know many people are working on ways to change that. But right now today, from a purely hardcore perspective, the rest of the world still needs dollars to operate on the global stage. And if nothing else, just to service all their US dollar debts and US dollar invoices that they traded. And so, again, I think China has incredible set of skills and incredible set of advantages and incredible capabilities. And so this is not me saying China's a bunch of idiots. That's not it at all. It's just that they have a number of challenges as well. And I always find it kind of funny when I ask people, well, what's the biggest problem the United States have? And they always say it's the debt. There's no way they can handle all the debt. And then I say, okay, well, the rest of the world has all that debt as well. What are they going to do? And they say, well, they'll just walk away from it. Okay, well, why does the rest of the world get to walk away from their debt with no consequences, but the United States can't walk away from its debt with no consequences? Again, I think the biggest lesson I had to learn in this business was stripping away my belief system from a moral perspective or what I wanted to see happen, and just say, you have to be just brutally, a mercenary when you're looking at these things. It doesn't matter what should happen. It doesn't matter who's the nice guy. It doesn't matter what would be the nicest way to handle this. Is what's going to be the result, right? And I think when you strip that away, I think the U.S. is still in pretty good shape on a relative basis.
So let me just interrupt to support that point. To your point about power, you gave a great presentation back in the fall at a conference we were at. It was at Brian London's New Orleans conference. And it was all about power. And it was really kind of equating money with power. At the end of the day, what really is money, right? And your challenge to the audience was, don't even necessarily think about it as a means of exchange or a store of value. At its basest core, what is it? And it really is a projection of power. And you use the example of the biggest goon in the prison yard, right? That,
Yeah.
You kind of like it or not, everybody has to do what he says as long as he can back up, his statements with his brawn, right? And to your point there about, you got to put your morality to the side for a moment and just think, mercenarily if X happens, what's likely to happen and why. Uh, I always think about back to when I was born. I was born one of the last people to be born when America was still, when the dollar was still tied to gold. I think it was like
Yeah.
3 weeks after I was born, Nixon severed the final ties.
Yeah.
And I think that's a great example of what you're talking about, where, basically the U.S. got boxed into a corner based on its policies that the rest of the world woke up and said, hey, you know what? I don't think the U.S. has really enough gold to back the dollars that it's issuing. And other countries started calling that by siphoning out our gold. And Nixon finally just said, all right, you know what? I'm shutting the gold window. And you know what? The dollar's no longer tied to gold. And you know what, everybody? Eat it, right? Like, you're stuck with us. You need our dollars, right? I know you don't like me all of a sudden telling you can't exchange them for gold anymore, but what are you going to do? You're all too dependent on me. And this may be another one of those moments, right? Where Trump is saying, look, I know everybody, you're kind of happy with the status quo. I think you've been getting a bit of a raw deal. And you know what? I am basically taking away or threatening to take away your access to the American market unless you concede to these things I'm asking you to do. And if you don't like it, then eat it, because what else are you going to do? And do you see this as sort of another
I
seminal moment of
think,
that same
yeah, you know
flavor?
what? I think that's a very good, it's a perfect example. And I'm glad you brought it up, because I actually, kind of revisiting that whole period in time kind of helped me crystallize my thoughts on what's going on today. So it's perfect in many ways. And the reason it's perfect is because that was a time period where it wasn't America's enemies getting frustrated with it. It was America's allies
Mhm.
getting frustrated with it. Nixon wasn't really super liked. Nixon was kind of a bully. Nixon didn't talk as prettily, I don't know, is that a word? Anyway, he didn't talk as
Sure.
nicely as
JFK.
JFK,
Yeah.
right? He didn't come across on television as the nice, warm, grandfatherly type. Do we know anybody else that's kind of along those same lines right now, right? And when the U.S. allies started to say, hey, you know what, we're just not comfortable with the way you're running things anymore, and they started to, France most sternly said this, and they took their gold away. There was rumblings that England might do the same, or Germany might do the same, and that's really what led Nixon to do that. And that was not a popular move when he did that, and that caused all kinds of uncertainty. And there was, believe me, there was people at investment conferences and writing newsletters and stuff saying this is the end of the dollar. They just delinked it from gold. It's no longer backed by anything. The U.S. has been printing money like crazy to pay for all of the Johnson administration's social programs and these wars all over the world. Vietnam and Cambodia, and there's no way that we can keep spending like this. And you can see the kids are no longer doing what they used to do. They're these hippies out in San Francisco, and there was all these social movements, and there's a lot of parallels in the early 70s to right now. But you fast forward 10 years, and all of the U.S. allies were still doing business with the United States. I think at the time, John Connally said, hey, it's our currency, but it's your problem.
Right.
You know what? And despite all of those problems, despite all of the challenges, the U.S. figured out a way to keep it going. And now, do I know for sure that's going to happen again? No, I don't know for sure. But all the people who automatically say there's no way they can keep this going for another 10 or 20 years, I'm like, well, come on, there's no way. I think you got to keep a little bit of an open mind. Maybe there's a way. And I'm going to give another quick example too, because I know your audience would probably like this. If I haven't mentioned this before, and you may have as well, but there's a book called The Storm Before the Storm.
You have mentioned it, but talk about it.
And so, I came across it about 5 years ago, 6 years ago, because my friend Mike and I, we used to go on these hikes once a month, and we'd talk markets and stuff. And one time he said, have you read The Storm Before the Storm? And I said, no. And then the next month he said, hey, did you read this yet? And I said, no. And then the third month he said, did you read this yet? And I said, no. And he finally got mad at me. He's like, what the hell's wrong with you? Read the book. And so I read the book, and I was like, holy cow. And so what it is it's basically a history of Rome from the year 120 to 60 BC. So it's like a 60, 70 year period. And it was 60 or 70 years before the fall of the Roman Republic. And what's really interesting is during that 60-year period, the similarities between that and the United States are uncanny. I mean, I can't even begin to tell you all the same issues that we deal with now that they were dealing with then, whether it was illegal immigration, whether it was inflation, whether it was political infighting, whether it was the wars on the other side of the world. I
Yeah.
mean, it was just on,
TikTok.
on and on.
Yeah, yeah,
Yeah,
yeah.
yeah, yeah. I mean, the similarities were just incredible. But in that 60-year period, there were so many periods where it went this way and it went that way, and it went this way and it went that way. And just when you think it can't go on any longer, well, then it does. And then the other faction comes in and takes it the other way. And the point is though, even though it was steadily declining, it's not a straight line. These things typically don't happen overnight. They typically happen over a very long time period. Just when you think things can't possibly be saved, they are. And then not only that, when the book ends, I think it's like 60 BC. The book ends just kind of before, Caesar comes to power. But that was when the fall of the Republic. Well, what people forget is that Rome lasted for another 400 years after this. Yeah. That's when it went into the empire, right? And so I don't think that we're even in the empire stage yet. And with the U.S. Now, I'm not sitting here saying the U.S. will be in power for the next 400 years. I'm just saying those who believe this automatically has to end tomorrow because the U.S. has just overstayed its welcome and it's a dying empire, it takes a long time for these things to play out. And, I'm the first to admit that this could get kicked down the road for another 4, 8, 12, 16, 20 years. I don't know for sure when this is going to play out. I think a lot of people, especially in today's, instant gratification society, they want it all over in the next 6 months or all over in the next 6 weeks. And that's just not going to happen. This is going to take years to play out.
All right. And just so I'm really clear, when you're saying this could take years to play out, are you talking about the redrawing of global trade that we're talking about here, or are you talking about America's debt crisis?
I think all of it, right? I think all of it. Listen, is it possible that in the next 6 months we have a global catastrophe, all the debt comes down and we get a global reset? Sure, it's possible. You should be ready for that, right? But those who plan on that, and that's their number one, base case, that this all comes down in the next 6 months, I think that's just wrong. And I think there will be, my prediction is there will be moments of time over the next 4, 5, 6, 10 years where it will look like the U.S. is doing really well. And then there will be moments of time where it looks like the rest of the world has the upper hand. And then it will go back and forth, and China will do something. Oh my God, they landed somebody on the moon and now they're the ascending power. And then something bad will happen and their housing market gets worse. And, okay, now they're on the downturn. But, I just don't think we're going to get a resolution to this in the next 6 months. I think this is a really big deal. It's kind of hard. It's kind of hard to put into words how big of a deal this is. And because it's a big deal, I think it's going to take a long time to fully play out.
And I'm sorry, I just want to make sure I understand. When you say this is a big deal, what do you mean by this specifically?
Basically the paragraph or the paragraphs that you read at the very beginning from our recent piece in the Macro Alchemist.
I'm sorry. Is it the transition that Trump has just set off here? Is that this, or is this just the Game of Thrones that goes on geopolitically?
Well, I think it's a combination of the two.
Okay.
We may get some resolution to what Trump is doing with tariffs in the next 6 to 12 months, but I don't think we're going to get a resolution of the geopolitical chessboard and America's role in it in the next 6 to 12 months.
Okay, great. I'm glad for that clarification. Yeah. And that's what I thought you meant, but I just wanted to clarify that for folks. And I agree. And, another framework that often gets mentioned on this channel by many of the experts I interview is the fourth turning. And by the way, folks, I got Neil Howe coming back on the channel in a week or two. I'll check while Brent's talking and give you the exact time, but he's coming back on soon. But kind of to your point, Brent, I think a lot of people think, oh, we're in a fourth turning, and when it ends, that's when everything's going to be on fire and there's going to be ashes left, right? And it's like, no, no, no.
Mhm.
Like America has been through several fourth turnings, right? There are periods
Right.
of upheaval, but then there's a new order that arises from them, and then the cycle starts again, and then So to your point, however this resolves in the relatively near term, let's say next decade. Um, it will be replaced by something that will have additional ups and downs and a new system that'll get constructed and then get sclerotic and then get replaced again in 80 years, right? So uh, don't be so incredibly binary in your thinking of like America is here today and has some troubles, therefore it must disappear tomorrow.
Yeah, and I think again, just be brutally honest with yourself. Look around the world. You have to invest for the next 3 to 5 years, and you have to pick a region. Where do you put your money? Would you send your money to China right now? Would you send your money to Europe right now, knowing what Europe has to deal with? Would you send your money to Brazil and Argentina for the next 5 years? Would you send it to Africa, right? Would you send it to India? Now, maybe the answer is yes, or maybe a small portion of it is yes. But the point is the money has to go somewhere. And are you really so convinced that the US is on its last legs that you are willing to lock up your capital overseas in some other market for the next 3 to 5 years? And if the answer is not yes, 100% yes, then you have to look at the US because that's the only place left.
Right. And for an individual who's listening saying, well, Brent, I think this part of the world really is going to be better. I'm going to put my money there. Fine. As an individual, you can do whatever you can. The question you have to ask yourself is, what do you think everybody else is going to think? Because it's where the capital flows go that determines how markets are going to perform, right?
That's right. And so we're getting into a time where, and this kind of happened a little bit after COVID. It happened a little bit after, the global financial crisis, but where investors are not going to be as free to choose as they have been in the time period I've been growing up, right? Political decisions are going to be made about your capital. That's just reality. You are going to be barred from doing certain things. You are going to be mandated to do certain things. And certain individuals or companies who may say, you know what, I do think China is going to be the best in 5 years. I would like to allocate my capital there. But you might not be allowed to do it. You might be mandated to do something you don't want to do. And that's the type of environment that we are moving into.
Yeah.
We're starting, it already exists a little bit, but I think that is going to happen even more so.
Yeah. And just to be clear, this is what Michael Every has been predicting for a long time, that this
Yeah.
is what mercantilism is you feed parts of your economy and you may starve parts of your economy. And it's the free markets the unfettered free markets that we're so used to both inside our countries and around the world in the globalist environment. Um, that doesn't nearly apply as much in a mercantilist world because you have these national priorities that are put above just pure economics.
Right.
Yeah. Okay. Look, Brent, this has been great. We've gone a bit far afield from the points I wanted to get to, but it's all been great. Let me try to wrestle this back in the remaining time we have left. Just to put a bow on China, um, in your eyes, what does a post-settlement relationship with China look like? So if Trump is successful in quote unquote kind of bringing China to heel or putting it in whatever box or getting China to agree to whatever trade commitments he wants it to agree to, what does that look like?
So that's a great question. I think, listen, this is just pure conjecture, but my guess is that we will still trade with China and we will still
Oh,
trade
I'm
with
sure
Europe
we'd
and
have
so,
to. We'd be,
yeah.
yeah. I don't think,
But
I mean,
but I do think the world is going to go from being one big economy and globalization to more regionalized alliances and more regionalized economies. And, China would most likely be you know, the head of its region, right? And, maybe Germany's kind of the leader of Europe, maybe because they've got incredible problems as well. But And then I think the U.S. would be kind of the head of the Western Hemisphere, so to speak, right? And I think there will be more trade intra-region, maybe, than there will be between regions. But I still think trade will take place between regions. But I think I just think we're moving away, not just because Trump wants to do it from a geopolitical perspective, but I think the local demographic and politics demand it as well. Like I think a lot of people think that all of this crisis that we're having now, I don't even think it's a crisis yet, but a lot of people are calling it a crisis, is all because of Trump and tariffs. But I think to blame everything on Trump and tariffs is to misunderstand the environment completely. Trump wouldn't even be in the White House if the crisis had not yet started. In other words, for somebody like Trump to get elected on a populist platform, there had to already be a large group of people in crisis to some extent or another. That is why he is in the White House. It's just that now it's becoming more of a front page crisis because Wall Street's feeling it rather than Main Street. And, kind of what we're going back to what we were saying at the very beginning, success might not be measured by the stock market going back to all-time highs. I'm sure they would love that. I'm sure they're going to do things to kind of try to make that happen. But I honestly don't think that's their number one goal. I think they know that they need to change some things, both for the way they work with the rest of the world and for the U.S. internally. I think they know that we couldn't continue down the same path without causing even more internal strife and internal suffering. And this is this is the hand we're dealt, and this is what we have to deal with. And, let's just get after it and stop worrying and stop complaining about it.
All right. I'd love to keep digging into this sort of regional trading blocks. I've had a lot of people talk about how they do think Trump sort of has a modern Monroe Doctrine view of the world, which actually you can argue makes a lot of sense, right? Which is, hey, let's
You can see
disentangle
it.
ourselves.
It's
Pardon me?
so obvious. Anybody who denies this is just denying reality. This is clearly what he's doing.
Yeah, well, and there's a lot of attractiveness to it, right? Which is we disentangle from a lot of things that we've been spending a lot of money on and maybe getting military involved in that hasn't really been working that much for us, except perhaps for the military industrial complex. But if we, look in our hemisphere, which is, naturally protected from everybody else by two massive oceans, there's a lot of opportunity to trade within it. There's still a lot of, emergent opportunity to tap in there. We all like each other more or less in this hemisphere. We can protect it. Trump's talked about the Golden Dome. We bring Greenland in more actively, whether it's annexed or just a very tighter relationship. We work out with Canada how we're going to help, even though we've irritated them in the short term, we'll make nice and we'll, strike tons of deals that'll let us then get more militarily involved in the Arctic so that we're preserving our national security as well as taking advantage of the minerals that are becoming increasingly available there. So there is kind of this nice argument to be made that, hey, for the next couple of decades, if America just kind of focuses on close to home, it can do great and, rest of the world, whatever, right?
Yeah, I think that is largely the plan.
Yeah. Okay. Then that's what I wanted to ask with you. Okay, we'll leave it there. Maybe we dig into that in a later date because it's a very interesting topic. Okay, last sort of set of questions for you. So, you're the dollar milkshake guy. I mentioned in the intro that the dollar was weakening, that gold was soaring. So if we can, let's just get your outlook on those two things for the next quarter or two from here. Do you expect the dollar to continue its slide here, or do you see a different destiny for it? And then I'll ask you about gold.
So I don't think so. Listen, dollar has had a huge move down. And of course, this has brought out the usual suspects saying, see, it really is different this time. Now, I'm not going to sit here and say the dollar hasn't gone down a lot. It went down 5% over a 2-week period. What's really interesting, and so people say this is proof it's different this time. But the fact is this has happened a couple other times. And the reason that this has happened is because of the design of the monetary system. So I could give a very long answer, but I'm going to give a pretty quick one. The other two times that I can easily point to that this happened was in September of 2008 and February of 2020. Now, I don't know if you remember what happened in October of 2008 or March of 2020, but it wasn't pretty.
I remember
Now, does
both.
that mean does that mean that this is going to happen in May of 2025? I don't know. Maybe not. Maybe so. But the point is the reason the dollar is falling and the reason US asset prices have been falling is because the US has sucked up all of the world's capital over the last several years. That is the dollar milkshake. All the capital flows to the United States. So when you get into a scary time, a time of uncertainty, time that you're not really sure what comes next, what do? You have to, and with their local markets were going down as well. And you must remember, China's markets fell, Hong Kong's markets fell, Europe's markets fell, Canada's markets fell over, in April. This was not just a United States thing. And when that happens, what do? You sell your assets and you repatriate them home to deal with the problems that you're having in your local economy. So how does that work? Well, they sell US dollar stocks or bonds. They get dollars in exchange. And then to send them home, they exchange them to euros or pounds or whatever it is, and they send them home. And so as a result, US asset prices fall and the US dollar falls. That same thing happened in 2008 and in 2020. But then if it continues to get a lot worse and we go into a real crisis, a real liquidity crisis, that's when both times the dollar rebounded very quickly and went up very quickly. And that's the same thing I would expect to happen again. If we have more downside, hard, sharp, and severe downside in global markets, I would expect the US dollar to start, making a rise higher as that global liquidity starts to trump the local liquidity needs. So I can't sit here and say that the dollar won't go lower, but if it does, I don't think we're going to go into an environment where the US assets continue to fall, the US dollar continues to fall, but asset prices and currencies rise in Europe and Asia. That just does not make any sense to me. Could it happen? If that happens, I'll have to kind of reassess and figure out what to do. But that's not my expectation. And I think a lot of that is the reason that gold has been rising. Gold has been rising because we are entering this period of sovereign debt, potentially a sovereign debt crisis, potentially a US debt crisis. And a sovereign debt crisis and a US debt crisis, that was the initial impetus for the whole dollar milkshake to begin with, is I thought we would go into a sovereign debt crisis. The world would go into a sovereign debt crisis. I thought interest rates would rise. I thought treasury prices would fall. So that never really happened to a big degree over the last 5 years, but potentially that's what we're going into now. But gold, I feel like just had a big blow off top. It had a huge run up. It's pulled back. My guess, if I had to really guess, we'll probably in the next week go back up and retest those highs and then probably pull back for a couple of months. Now, I can already hear people saying, see, Brent's bearish gold. And the thing is, everybody should own gold. If you don't own any gold, you should definitely go buy some gold. But if you already own a bunch of gold, then heck, you have made a lot of money on it over the last couple of years. It's not a bad idea to hedge a little bit of it, take a little bit of it off the table. I will say, if you zoom out and look at a chart of gold, the last 2 times what just happened, the following years were not great. Now, this is not predicting that gold's going to go to $1,000 and stay in there. I'm not saying that. I'm just saying it's had a really good run. It's served its purpose. My guess is that it's probably topping right now. Maybe it pulls back for a couple of months. Maybe you have a chance to buy it at a little bit better price over the summer. But to be clear, I'm not selling my gold. I'm not recommending anybody sell their gold. I'm just saying I think it's up like 25 or 30% for the year already. I don't think we're going to $10,000 gold today, and the dollar is going to end up in the trash bin. I just think that that's not realistic.
Okay. All right. And then how about the markets in general for this year? I guess because it sounds you still feel like it's going to be a 2022 type of environment. So I guess that means that the beatings will continue at least through fall.
I think so. So I think the analog is really good because between January 1st and September 30th, or the first week of October in 2022, the market fell. S&P, the NASDAQ was down more than this, but the S&P went down 25%. But along the way, there was 2 rallies of 6%. There was 1 rally of 11%, and there was a 4th rally of 17%. So now we've seen, the market went down like 15%. We've had a rally of 5%. Wouldn't shock me at all if we have, I think we'll probably go down. We'll probably retest those lows, maybe even go a little bit lower. But then we'll probably have a hard rally, right? But my guess is that it's going to be later in the year, Q3, Q4, before we find any kind of solid bottom, if we find one.
Okay. And just to let you know, you're in pretty good company with recent guests on this channel, including Felix Zulauf. He thinks it's going to be, fairly choppy through fall. He recommends specifically selling the rips and, nibbling in on the dips if you want to, but he's basically saying keep your powder dry. That's the big priority right now. He does think, and again, I've invited him to come back on later in the year to make an audible call if things change when he has more data. But he thinks in the fall we will hit a bottom, and that'll really be the time to really start going pretty aggressively long, because he thinks 26 and 27 are going to be pretty good years in the market. I don't know if you're comfortable talking that far.
No, I think that's very possible, and that follows the analog for 2022, because 2022 there was a lot of uncertainty, a lot of volatility. The market went down a lot. Everybody thought that was the end, and then we had 2 years of a pretty strong bull market. I could easily see that same thing play out again.
Okay, all right. Well, let me ask you this just to wrap this up. How are you investing right now, looking at the next quarter or two? Are you just sort of sticking with the assets you've normally told me that you own, with the normal allocations, or are you making any adjustments to focus or allocation given your current read?
No, so we've been very fortunate. So we had a pretty tough December because remember at the beginning I said anybody who hasn't been paying, it wasn't ready for what Trump's doing, just wasn't paying attention. I thought that everything that started happening in January would start happening in December. I thought we would get a bounce out of the election just on the euphoria of Trump coming in, and the belief that he, the positive business aspirations. But I thought once they started to figure out what his policies actually were, the markets would sell down. So we started, adding hedges pretty significantly in December, and it went against us pretty hard. So that was kind of a rough Christmas, but they started to pay off pretty well in January, February, and March. And so we're in good shape right now. And so we're kind of ahead of the game. We have dramatically reduced our hedges a couple of weeks ago. We still have a couple little ones, and we've started to put them back on. My guess is that within the next week, we'll have a lot more of them again, because I do think that we're going to see further downside. We'll keep our allocation to gold, even though I think gold is due to pull back. We'll keep our allocation because that's a strategic allocation that we don't trade. We may do some, gold hedges, whether it's puts or whatever it is, at some point. I still think that interest rates probably go sideways to higher. So we're not, all of our fixed income exposure is very short term. Mostly T-bills, maybe a few that go out 2 or 3 years, but really no duration at all. And I think we still have exposure to U.S. equities. Again, they were hedged for the first part of the year, so that worked out pretty well.
Is it just hedged, or are you reducing any of your?
No. Right now it's hedged, but we're not net short now. We were net short back in February and March, and that worked out pretty well. But now we're pretty much just kind of flat.
Okay, but I'm making this up. You can correct me. If normally your portfolio is 40% allocated to equities, are you protecting it just by hedging that 40%, or are you bringing that 40% down to say 30% as well?
Oh, no. We have actually used this dip to actually start buying. So for people who are underweight equities, we're starting to add back with the I'm not predicting that we bought at the very bottom. We think there's going to be further downside. But everything got so oversold 2 weeks ago that typically things don't get more oversold than that. And so to me, that was a pretty obvious case that we're going to at least get a relief sideways move, if not a little bit of a bump. And I think we've just bumped 5%, 4%, 5%. So we haven't had a huge rally. but we're certainly not seeing the crazy volatility and fear that we saw 2 weeks ago. But I think it's very possible that we do again before this, before the next 3 or 4 or 5 months, maybe
Okay.
in the next couple of weeks. It wouldn't surprise me in the next couple of weeks.
All right. Well, look, Brent, I appreciate, as always, you being so transparent with how you manage your capital there at Santiago Capital. So fantastic discussion, as always. Thanks so much for giving me so much of your time. For folks that have really enjoyed this discussion and would like to follow you and your work, Brent, where should they go?
Well, there's the three best ways to do it is you can follow me on Twitter. If you go to just type in Santiago Capital, or the handle is at Santiago AU Fund. We're doing a lot of work on Substack. So if you go to santiagocapital.substack.com, we have both a regular version and a premium version there. We have our premium research service also. It's on Substack, but it's also available on its own standalone website, which is macroalchemist.com. And then finally, every week on YouTube, we do a podcast every Sunday morning, which is called Milkshakes, Markets, and Madness. And so, some combination of all of that stuff, you should get a pretty good idea of what we're up to.
Okay. Well, Brent, as usual, when I edit this, I will put up the handles and
Thank you.
URLs to all that stuff. You're creating a lot of work for me, but I'll do it for you. And folks, I'll also have links to those in the
Sorry.
description below this video too, so you can get there with one click. But no, you're up to a lot of great stuff, and clearly. All right. Well, look, Brent, thanks so much. Folks, please thank Brent for coming on and delivering such a wonderful discussion and being as transparent as he's generously being by hitting the like button and then clicking on the subscribe button below, as well as that little bell icon right next to it. Brent manages a fund. And if you want to learn more about it, go to santiagocapital.com. But if you are one of the thousands of individual investors who are watching this video who are just trying to figure out how to navigate the road ahead, especially if it looks, as volatile as Brent thinks it might be for the next couple of quarters, and you just, hopefully want to prudently grow your wealth for that period of time, but more importantly, not become collateral damage to any, potential drawdowns or curveballs that happen along the way, then I highly recommend that you work under the guidance of a good professional financial advisor who can come up with a personalized portfolio strategy to safeguard your capital. If you've got one who's already doing that for you, great, stick with them. But if you don't, consider having a free consultation with one of the financial advisors that Thoughtful Money endorses. These are the firms you see with me on this channel week after week. To schedule one of those free consultations, just fill out the short form at thoughtfulmoney.com. Only takes you a couple seconds to fill out the form. Again, there's no price, there's no fee for these consultations. It's totally free. You'll get a personalized assessment of your personal financial situation and what these firms think you should do. And there's no commitment to work with these firms. There's no strings attached. It's just a service they offer. While you're there at thoughtfulmoney.com, don't forget to go click the newsletter link at the top of the site, sign up for our Substack. And I want to thank Brent. So my premium Substack subscribers get the Macro Pass service, where every week they get a free report, or they get a report as part of the service from one of the partners that gets interviewed, one of the people I interview on this channel week in and week out. I think the last one that we just released was from Lacey Hunt. And the next one we're going to release is going to be that report from Brent, the Donald and the damage done. So Brent, thanks for making that report available to our premium Substack subscribers.
You're welcome. Thanks for having me.
All right. Well, look, Brent, I'm going to give you the last word here. Like I said, the people who are watching are mostly, we do have some professional investors, but a lot of them are just regular people trying to just make their way in these crazy markets. What parting bits of advice would you have for them?
I think the best advice I can give is try to keep an open mind. Don't get too, tied to one school of thought or one way of thinking about things. I try my best to kind of listen to everybody and think and see everybody's point of view. And then, as I mentioned earlier, try to take your personal wants and desires out of your analysis and just figure out what's most likely to happen. And I think if you do that, and kind of think for yourself, you're probably going to be ahead of most of the people that are just kind of chasing the headlines.
All right. Well, Very sage advice. All right, Brent. Can't thank you enough, my friend. It's always great to have you back on. Look forward to having you back on soon. And particularly, I'll reach out to you in a couple of months at the very latest. But if there's something that happens that changes in any material way that you're looking at the world, you've got an open invitation to come on this channel whenever you want.
Great. Thank you.
All right. Thanks so much, Brent. And everybody else, thanks so much for watching.